How quickly can things swing back when everyone is short dollar right now?
Well, that is something that FX traders always have to take into account, right? Their positioning can mean that the moves don't go the way that you would normally expect them to be, and you know there are various things that could get us into a situation where the dollar maybe starts to behave more like a haven again, and we see more cash pouring back into the US, or in a very good news situation for the US as well. Likewise, that could lift the dollar. However, you know, most of the people that we speak to seem to have this long-term bearish dollar position at the moment perspective. If you add into that the idea that the Fed might be cutting interest rates later in the year as well, that's another sort of drag on the US currency. And in general, if you look across markets, measures of implied volatility are extremely low. So nobody's really pricing in that risk of an immediate or very sharp bounce back, which, again, could perhaps only magnifies the risk of it actually happening.
Paul, we get U.S. CPI next Tuesday. Do you think we're going to get any clarity on the tariff pass-through to CPI, or are we going to have to be waiting until Q1 next year?
That's the thing. I mean, some of the Fed policymakers are telling us it might take a whole year for that to pass through into prices. And it might actually, you know, kind of be in a very much more managed way. You might have this idea or this scenario where there's some sort of agreement between the US vendors and the suppliers in the rest of the world that they'll sort of share those costs somehow and limit the pass-through to consumers or trickle it through over a steady period of time. And so the idea that it's going to show up in CPI data at the moment is a difficult one, particularly when we don't really know what exactly the final future tariffs are going to look like. And I think that you're still hearing that quite a lot from the Fed policymakers. It feels like the possibility of the Fed moving this month is pretty remote, but the market is still priced for 2 cuts this year, September and then another one. And a lot of the policymakers are still talking to us about the idea that that could be where we get it. So a lot will depend on that path of CPI and on the outlook for company earnings and the labour market. But it's hard to read too much from the immediate data that we're getting through when there's still so much fog out there.
Paul, Jamie Dimon says the Fed could hike given the inflation risks.
Yeah. It's possible. I mean, that's a recipe for getting fired from the US government at the very least, right? But I mean, there is inflationary risk, but then there's tariff risk. There's a lot of risks out there. It feels like, you know, the Fed is pretty committed to the idea that interest rates are going to come lower over time and that it's not so worried about it. Yes, you have the comments from Trump kind of breathing down their neck as well. If you look at what we see in the bonds market, you know, implied volatility, the MOVE index is down at the lowest since 2022. So markets aren't panicking about the idea that the Fed is going to do anything that upsets the apple cart anytime soon. It's more those supply dynamics which have been wobbling around the back end of the yield curve that we need to worry about and keep our attention on.